Welcome to Bank of England Mortgage, Ridgeland, Mississippi. I'm here with my good friend, Jeffrey Prewitt, the local constructor, and we're here. We're going to go over some mortgage ideas and some questions and answer just the home buying process and kind of, we've known each other for a long time, so we're just going to have a little conversation here. And I'm going to answer questions, and we're just going to try to be very educational, short and sweet, but get to the point and kind of provide some information that will help people decide on home ownership. So,
Good deal.
yeah. So, right now in this market, Jeffrey, it's wild. The inventory is low. The price ranges are different, but still a good time to always buy real estate instead of renting, right?
Mm-hmm.
So, what are some things that you think we both have young adult children and stuff that we wish we could tell ourselves back in the day, and then to educate them so they're prepared,
Okay, so I guess best example off the top of my head, I have a son. He's in this process. He thinks he's in this process right now of getting ready to do this. So you have a 20-year-old fixing to get married, recently employed, wants to go buy a house.
Right.
What does he do? What do you tell him?
Young adult, 20-year-old. So this is perfect because you want to educate them now and tell them, don't get too antsy and jump the gun and and just buy because you think you're ready. Let's get you in. Let's sit down. Let's look at credit scores. Let's look at your income. Let's make sure when you do find a house that you're not going to be overextended. You're going to be able to still have a life, enjoy. You're about to be at the good time of life, and you don't want to be mortgage poor. You don't want to overpay right now, and you want to make sure you're taking advantage of all the first-time homebuyer programs. These kids today, they get online, they look, they go, oh, this looks good, and the most important thing is to be able to look at the guy across the desk when you're buying a house to answer all your questions, to educate them, to make sure they're going to be ready to buy the house. I may hurt his feelings and tell him he's not ready right now, but he's going to appreciate me big picture when we get a game plan to get him ready, credit score wise, saving some money, down payment assistance, different things that are going to get him. So when he does buy the house, he's excited. It's a good time for him.
So with all of that, I mean, what's an average time frame? So the time I come in here, how long should I expect this to take me to actually be able to purchase my house?
When you come to us, we tell everybody 25 to 30 days because you have third parties that we need to do their job. So if the appraisers will hurry up and they're not backed up, then that can bump up the closing. Title work, homeowners insurance, third parties we depend on to get us things. Mm-hmm. If all that comes back quickly, we're closing deals in 2 weeks. Mm-hmm. If right now appraisers are a little slower, I'll tell people easily, give me a 3-week contract. That shouldn't be a problem because everybody can get you stuff a little quicker. This summer, when things are really busy, I would tell everybody I need all 30 days because these appraisers are swamped. And so I set the expectation on the front end. And if it's a clean file, W-2 file, there's great credit scores, I can go ahead and tell all the agents, hey, as soon as I get the appraisal, I'll get the closing disclosure out. There's a 3-day law. It's got to go out before closing. And we'll go ahead and not bump up the closing if all parties want to,
So how, this whole process, how much does that cost me? How does that play out?
So on the front end, not a dime. I'm pre-approving the client. I'm looking at everything. When they come to the closing table, it's costing them their down payment or closing costs or whatever the negotiation is. So a lot of times the first-time home buyer doesn't have a lot of money. I'll tell the realtor, hey, keep the sales price up high, but ask the seller to pay all the closing costs. Help their bottom line, So be expecting when you come to closing, first-time home buyers come with 3.5% down, 3% down, working on 2 that they wanted to do the conventional. Conventional loans are 5% down for the better rate and lower PMI. So it just depends on the scenario, on the client. Some people have the 20% to put down and they want that lower payment. They put a big chunk down at closing. But remember, you have appraisals to pay for, closing attorneys, underwriting, different third-party fees that you can't avoid that doesn't matter where you go for your loan, you're going to have.
So, I mean, and this is just kind of in your opinion.
Yeah.
So could you throw out a number? Say the average person starting out or just in their mid-20s or whatever, wherever life's got them, let's say they're making $35,000 a year. Mm-hmm. Is there like if you wanted to buy a house, you're probably looking at about this or below. That's about the standard of where you're going to fall.
Yeah, so I have a client now that can only be in that 150 to 175 range because he's around that income, but he has no debt. Mm-hmm. Okay, so that That's a broad question, because if I pull somebody that makes that kind of money and they have zero debt, then they're going to get a little more house than the person that has the car note too.
Mm-hmm.
So the same person that makes that same salary that has that $400 car note a month, they're not going to be getting much house.
Mm-hmm.
You know, they're going to have to wait a little bit.
Mm-hmm.
So that's what's huge is I've had to tell people, hey, you may want to, if you really want this house, you're going to have to quit living extravagant with that big old SUV, and let's go get you a nice
You want
sedan.
a house or you want a car?
Yeah.
Where do you want to live?
Or you could live in that Tahoe if you want. But anyway, I have that conversation, and I beg people, please don't go get new debt. Right? I've had people go get furniture right before closing. I'm like, do you realize that just messed us all up? So things not to do. I beg people, once I have your credit pulled, let's don't do anything else until you own that house.
So when it comes to when I want to refinance my home, if I buy a home today, is there a time restriction on how long I have to be there before I can refinance it?
Yeah. So the rule of thumb is, to make sense, we want to make sure you get a full point better probably. And well, depending on loan amount, but we'll look at that. But we'd like for you to have the current loan for at least 6 payments, so there's no recourse on paying anything back. So once you've had that loan for 6 mortgage payments, there's no penalty to refund. There's nothing. I mean, you are ready to go. So if rates drop, you go on a list and, hey, you're a full point better. Let's look at a refi. I'm always going to encourage and let my people know, hey, we helped you with your home purchase, but we refi too. So if I see rates getting better, you're on our list. We'll call you. I'm looking out for you. So that way they don't have to shop and worry about it. They know that they're taken care of over here. When rates do drop, they know they're going to get a call or an email. Hey, let's look at this. And if it doesn't make sense, fine, move on, but at least look at it and analyze it for them.
Gotcha. All right. So we've kind of been hitting the numbers. Now let's talk about the process.
Okay.
So I want to buy a home. I come to you. What do I need to bring with me? What should I expect? I mean, what's the process? What do we do? Kind of how long does it take? What am I on the hook for? So
let me tell you about the 20-year-old son I would ask for his transcripts, because he's brand new. He hadn't been in his job 2 years. So I want to show school, or did he go to a fire academy? I'd want to show some type of proof so I could count that as work history, right? For people that have been out of college, they've been at a job and they've been there 2 years, I'm going to get their W-2s and their pay stubs. And I'm going to ask them if they own any properties, and I'm going to analyze their income on that. If you're self-employed, I got to get 2 years of your business returns and your personal returns and analyze that to get your income. And so when you're self-employed, I ask you have more paperwork to bring in. So the average W-2 client's just going to bring me their current pay stubs. Maybe they just took a new job, their letter at the new job saying what their salary is going to be, different things like that. And then I'll pull credit, look at their income, look at their debts, and see how they look, and we get a game plan from there.
So with those numbers you say they're in mind, is there a generic number that you're looking for, or what factors base that as far as what's my credit score, how much of a down payment, all of this? I mean, is there a general, or is it just all completely individual? How does that work?
Well, yeah, and that's why I love what I do, because there's nobody the same. So everybody that walks in my office daily, their scenario is different. Their credit score is different. You may have somebody that thinks they walk down the road. I get this all the time. They get turned down because they had a lower score, but nobody showed them how to get their scores up. I'll take their time, hold their hand and go, hey, look, you're at a 580 now, but look, you can pay this credit card to this, pay this, get rid of this collection. I'll have you in the 700s. We can get you a house and a good interest rate. It's just taking the extra step. So everybody's different, and I love it. But down payment's a big deal, because if you're a first-time home buyer, you can take advantage of grants and first-time home buyer programs, so you don't have to come out of your own pocket. So we team up with realtors to help them structure deals where the client can stay liquid and not spend all their money to get into a house,
So is there ever a situation, somebody new starting off, they don't even have a credit score yet?
Right.
Are they a candidate, or how does that work?
Yeah, so you have to get a prepaid credit card or something, or you find a family member that's willing to add you as an authorized user to get you some scores. So you have to have credit scores to buy a home. So there's some programs that you can have with just one score, but they like for you to have 3, and you take the middle. So say you don't have a score, you're brand new, you come to me, I'll help you get a prepaid credit card, and you'll use it for gas or lunch, and you pay it immediately. Within 30 to 45 days, you'll have scores. So we'll help people get there. That's why it's so important to come in on the front end. You go to I'll look at it after people go to my link, mortgagemanms.com. I get a game plan for them. Then I get them to come in and let's look at everything so we're all on the same page.
Mm.
You know.
So when they go through the process and they get qualified,
Mhm.
now qualified doesn't necessarily mean approved. What's
Well,
the difference?
I send if you get a pre-approval letter from us, you know you're good.
Mm.
Because I look at everything on the front end. I put my underwriting hat on, and I make sure all that's out. If it's a close, tight deal, I'll call the realtor. I go, hey, the debt to income is close. This is a doable loan. There's going to be a little hair on this file. Are you willing to sign this contract? Or I recommend you put it back on the market and find somebody if you know the market's hot and you don't want to wait on somebody, maybe need 5 more points on their credit or wait on the pay some debt off or something. So I'm straight up on the front end so we can get a game plan for everybody.
Mhm.
Because the last thing you want to do is send a pre-approval letter out, then all of a sudden you're not telling somebody something, then you can't close. That just does nobody any good. It wastes everybody's time and money and effort.
So is there any difference in somebody coming to see the mortgage man versus going to Trustmark, and sitting down with them? What is the difference if there is one? What's the difference in that?
So there's little variables. We take pride in, we're going to, some of these banks where they have a box, right? And if you don't fit in that box, we're not going to do your loan. They have their overlays. We don't have overlays. If it works for Fannie, Freddie, FHA, we're going to make sense of the loan. I won't mention names, but we close a lot of loans that other lenders turn down because it didn't fit in their box, right? So we have a platform here where if it makes sense and it's doable and it passes the Fannie and Freddie guidelines, we're going to close your loan for you. Where certain banks are like, no, even though you're probably sellable, you don't fit in our, say they have a little overlay on, they want a higher credit score or something else, reserves in the bank. They sometimes will turn, we have realtors that were like, hey, another turn down over here, can y'all help it? We've closed so many loans that were so-called not doable at other places. So that's why we take pride at BOE Mortgages. Like, we're licensed in all 50 states. We have the broker side for lower score. We have the bank statement loans. If it's a doable loan, we don't have to send it out. We can do it in-house. So that's why I chose this platform, Bank of England Mortgage, because I want to be able to tell my buddy moving to Florida I can do his loan, or Ben Bush in my office, he's a veteran. He's working, helping a guy in Alaska. Wow. That's cool, So we have different things
that's good to know too. Because I got a son in Alaska. Maybe y'all can hook him up.
Yeah, exactly. So we can do his loan, and we have a relationship. So why not help my friends in Georgia, Alaska, people we know? Well, I couldn't in my other world. Now we can because we're backed by a bank that's doesn't mind us helping everywhere. So it's pretty cool.
Well, so back with the numbers portion of it, and because I think everybody understands what the mortgage is, they understand what they're doing, but at the same time, I don't think they understand what any of it really means.
Right. Right.
So, what are the big impacts as far as as the interest rate as it moves? What impact is that having per that versus also with with how much money you can put down? How do the numbers really affect what your monthly mortgage winds up being?
It's a big difference on the higher loan amounts when rates go up, because you're talking, when you're borrowing $400,000 or $500,000, you're talking half a point difference can really affect you, a couple $100. You start your payment, you're like, wait a minute, I thought my mortgage payment was going to be X. When you throw taxes and insurance on top of where rates are, the sixes, mid sixes, it can affect your bottom line. So I tell people right now, where are you comfortable with payment? Not size of house. Where do you want to be payment wise? Let's look at it there, and then I can tell you what price range house that is. If that's not there, you may want to wait for rates to come down. But guess what? Your interest rate's 100% while you're renting. So you're throwing money away. You're not building any equity renting, right? The only person that is not buying right now is they decide, hey, I'm sitting at my house at a 3.5. I don't have to move yet. I'm going to wait and watch. Well, the market's not going to get back down. Hopefully, we don't ever go through a COVID again. We're not going to have rock bottom 2 or 3 rates. So they're going to get back down in the 5s and stay steady. But you can never make a bad decision buying real estate in a good area, because it's a big savings account, right? So get your payment where you want it, and know that, hey, if the rates do drop, I can refi. I can always lower. But the rule of thumb on a refi is a full point better, knowing you're not going to move. And we look at a no-cost refi, try to roll a little bit, if there's any cost, into the loan where you're not coming out of pocket when you lower that interest rate. So I would say at the end of all this, there's some good info, but people can take advantage of whatever age group with our technology. They can get online, download the app, they can come see us in person. They can do a lot of things that fit their schedule instead of feeling intimidated that they don't know where to start. There's not a dumb question for a home buyer. So if you're the younger adults are wanting my app. So the technology is second to none. So I send them to mortgagemanms.com. I see them working on it. They may call me with some questions, but they're able to upload their documents, their W-2s, their pay stubs. I'm able to review it. I'm able to, if they looking at houses on the weekends, I'm able to tell them, hey, here's a pre-approval letter, send it to them and their realtor. We have really stepped up our game to be available anytime they need us through our technology. And if they need something and they want to come in person, we have the clients that don't want to turn on a computer and they want the face-to-face like we're doing. Perfect, fine too. Let's do that. Let's scan it and we'll get you settled. Whatever is, everybody's different. Like we talked about, whatever works for them, for that family. So.
Well, excellent. Well, man, I really appreciate your time, and I hope this video winds up being a help for somebody out there who needs some education. And if you need to know anything else, feel free to reach out to us, and we will put you in touch with who you need to be with. Thank you. Hey guys, thanks for watching. Subscribe for weekly content. If there's a video that you would like to see or you're interested in, drop us a comment below. Let us know. We'll see what we can get put together. Go hit us up on Facebook, hit us up on Instagram. We would love to try to work with you, and we'd love to speak with you. And as always, start every job with a little TLC.